You, this morning, or actually last night, when you saw the futures open positive, said you'll believe it when you see it.
Yeah, well, I mean, look, you take NVIDIA, which we're going to talk about. The long knives are out for NVIDIA in the sense that no matter what they do, there are people, I mean, and the defenses that we're getting for NVIDIA, there's overwhelmingly a sense that, you know what, that was then and this is now, and NVIDIA is just okay, and give us something new. No one can find anything that they like. David?
Yeah.
I mean, no one likes anything.
No one likes anything?
Well, tell me what they like.
Kenvue?
Well, yeah, it was 24 to 27, that upgrade. By the way, that stock's not even any good.
Guys, I think I want to move on to Microsoft because that was...
because it's substantive?
Yes, thank
you.
And it was such an important component of the trading on Friday, in particular, this note that we already referenced and, about... The title of which was Channel Checks, and this was a TD Cowen note, indicate U.S. data center lease cancellations by Microsoft. There was also some tweeting going on or whatever, posting on X, and any number of things that really did contribute to concerns.
Oh, yes.
Because those concerns have been abundant for some time. Namely, we've talked about them so often here. Is there a possibility that many of the hyperscalers will start to look at the return on investment and say, maybe we've overdone it a bit? We all know how much money is already potentially in the pipeline. But when it comes to Microsoft in particular, remember, they chose not to continue to be the sole partner, for example, of OpenAI, the Stargate project, using new partners in order for them to expand enormously the number of data centers they have at their disposal. And so I guess Microsoft in particular, there would be those questions. So when you saw a note like that, it did spark at least a lot of it continued that concern at an even higher level that had already been there. But this morning, guys, we're really seeing a fairly significant refutation of the note itself.
Yeah.
Apparently, Jeffries was in Australia with Microsoft's IR, and they said to Jeffries, here, this is our response, you can use it. They basically said we're refuting this, and the broker report. This is one of the parts of the note have a misunderstanding about what we define as leasing deals over 15 years in length. The underlying owner of the data center servers is not Microsoft, but they operate it. What I've also heard from people in this area that I've been trying to learn from for now a year, 2 years is. A lot of it has to do with power, and as we know. And if the power is not coming or not going to be available at given data center, then you're going to say, well, we're going to move somewhere else.
Right.
And so you're going to maybe terminate the lease there, but you're not giving up the overall. You're just moving somewhere else. And so you may consolidate. You may move to where the power is going to be delivered as was promised, but it doesn't mean that there's a diminution in the overall spend.
Yeah, totally.
That seems to be, guys, where we are right now.
I think that's right. Now, David, you are down there in Florida. I wanted to know, isn't there a sense that if Microsoft was doing all this, it would help its now what looks to be enemy of Microsoft, Sam Altman?
You think OpenAI is an enemy of Microsoft?
I'm starting to feel that way.
That's kind of strong language.
I'm starting to feel that way.
I mean, Nadella has been committed to at least $80 billion. Many of the analysts who follow the company expect more than $80 billion in CapEx spending this year, perhaps as much as 90 to 100. But again, this does play to those fears, the TD note. You saw the implications of that on Friday in terms of some of the sell-off in the related names.
Go ahead. NVIDIA, which was at 139, and when this leaked out, went to 135. Not everybody had the note.
Yes.
The note had tremendous impact because it was Friday afternoon, and we kept thinking, well, we were all searching, like, what's wrong? And it turned out to be a note that was then refuted, Carl, by Microsoft.
By IR, which again, to point out, Jeffries, they say that they're on the road in Australia with them. Now, it's interesting to think that they even go to Australia to begin with, but I don't know. It's like
because it's tiny?
No, it's just, I didn't know the capital markets were that great importance there, but great. But they simply say, listen, they make investments based on a 10-year view on demand for cloud and AI demand. They tweak their forecasts up and down on this over time on a regional basis, depending on which regions need to be prioritized. And again, it also may have to do with the availability of power. So I don't know, Jim. Does everything now just come back and everybody says, all right, don't worry about it?
Man, I'm struggling with the idea that if NVIDIA goes from 140 to 135 and then bounces to 137, whether that really is something that makes you feel great ahead of the quarter. I'm looking forward to the quarter, and there's questions about Blackwell. Ben Rice just has a fantastic note out today from Melius saying this is NVIDIA's time. It's entirely possible it's NVIDIA's time, but I get this ennui, Carl. There's an ennui about these names that is just so palpable. It's like they don't want to talk about Mag 7. It's just like we moved on to another movie.
Right. Well, maybe it's best just to listen to what Nadella himself said last week, and that is, quote, there will be an overbuild. It's not just companies deploying. Countries are going to deploy capital. I am thrilled that I'm going to be leasing a lot of capacity in 27 and 28. He's a renter.
Well, I mean, Snowflake's gone up, and that's a renter. You can rent
That's
it
all
that way.
right. And we should point out many of the hyperscalers both commit this enormous number of capital, but then they also are doing that, the leasing, or the facilities are actually majority owned by private credit, whether it's Apollo, and they're paying lease payments in that way. So
Blackstone.
The fact is the numbers are even larger.
Right.
But they can then pull back conceivably. Although they're signing long-term lease agreements, so it's not as easy to do.
Okay.
It's a critical week for big tech stocks and the markets overall, of course. Why? Well, NVIDIA will be reporting earnings. Christina Partsinevelos joins us now. She tells us what investors are watching, what we may be expecting. Christina.
Well, we know, or I should say we're expecting NVIDIA to crush Wall Street expectations. It has a history of doing so. But lately, the stock really has been stuck, just around $135 for the past 8 months. Shares also taking a slight now in the green, but they were taking a hit earlier from a TD Cowen report that Microsoft was canceling leases for AI data centers, which could impact GPU demand. But the major problem right now is recent supply chain checks suggest there are still some delays with their GB200 rack shipments. That's the high-powered CPU, GPU, NVIDIA boards. Turns out managing power and heat at this scale is pretty tricky, and that's pushing initial production into Q1, with the first full quarter of shipments likely happening in Q2. So in other words, the Blackwell sales ramp might just take a little bit longer to kick in. But there's some positive. NVIDIA's ecosystem is still signaling strength. Suppliers like Taiwan Semiconductor just issued strong guidance. Foxconn outlook is improving, and companies like Dell, HPE are already securing Blackwell-based servers. Demand from hyperscalers, you guys talked about it in the previous, just before the commercial break, as well as demand from China, sovereign AI projects in France, or Stargate in the United States, could help offset any Blackwell delays, but looming U.S. restrictions is still a major risk to NVIDIA. The restrictions would require licenses to ship clusters of chips. The process is going to be time-consuming, and the results would definitely be uncertain. So with that risk out there, Morgan Stanley analysts say they don't see why NVIDIA would guide any more than the usual $2 to $2.5 billion increase. In other words, no surprises are expected post-earnings, guys.
We'll see. I think implied volatility is about 8%. It's going to be an interesting evening when we get it. Christina, thank you. Christina Partsinevelos. Our next guest says he does expect solid results from NVIDIA, but is more focused on the company's outlook in the months ahead. Let's bring in Niles Investment Management founder and portfolio manager, Dan Niles. Dan, great to have you again. Good to see you.
Good to see you too, Carl.
So you will be focused on the April quarter forecast, eh?
I mean, I will be, but it's more interesting to see what they have to say. My view hasn't changed at all, which is by the time you get to the middle of the year, you're going to get an AI digestion phase. The data that's come out at the end of last week, including Microsoft's CEO on a podcast, talking about he's looking forward to being a leaser of capacity by 27, 28, because he sees plenty of supply coming on, which means computing costs are going to drop. That tells me what I need to know. You got to remember, the semiconductor companies are always behind the customers. The customers, they get a better look at what demand is, and then they will go ahead and change what the orders are after they get more comfort in the fact that that, in fact, is occurring. So I'm sure NVIDIA is going to be bullish on the call. Quite honestly, to me, I don't really care that much, because I look at what the biggest spender of AI CapEx is saying, which is Microsoft. And one of the things that's driving the market down today is IR from Microsoft is in Australia, and they're sort of clarifying some of the notes that came out on Friday. And they're saying,
right,
we think supply and demand are going to be in balance by the end of our fiscal year, which, by the way, is June. So it's not that far away. And we think our CapEx growth is going to slow to more in line with our revenue growth. Well, CapEx growth is running 50 to 60%. Their revenue growth is running mid-teens. So you look at that and you go, okay, well, that pretty much confirms the fact that CapEx is going to slow down. And so for the NVIDIA print, it's more interesting to just see what they have to say. Jensen looks out 10 years in advance.
I don't know. Meta, Google, Amazon, Oracle, they've all been ramping up spending in a big way.
Well, they haven't. Because
haven't?
if you go, and I've written about this multiple times, look at Oracle. If you look at Oracle, Oracle came out and said for their next fiscal year, they're going to go ahead and double CapEx. So you look at that and you get incredibly excited when you don't do any of the math. When you do the math, you go, okay, well, their fiscal year ends in May. This implies $13.7 billion in CapEx. You've already had 6 months go by. So that leaves $7.5 billion left to spend. In the most recent quarter, they spent $4 billion. So $4 billion doubled is $8 billion. That's not 7.5, right? So their sequential growth is actually going to go down in AI CapEx. But you look at the headlines and you go, oh, CapEx is doubling. That's fantastic. That's the problem with a lot of the analysis you're seeing is people aren't actually going through and doing the math of what it means sequentially. Much like with Microsoft today, there's a reason why after IR is clarifying this, the stock is going down.
So then,
I'm sorry.
Dan, why would you go long into NVIDIA, into Dell, into Broadcom, all these supplier names we're going to get in the next couple of weeks?
I didn't say I would be long into it. I mean, that's my point. There's a lot of, much like the prior comment of, oh my God, CapEx is really strong. When you actually go and do the work, it really isn't. And the way you need to think about this is, you know, we all lived through, or most of us lived through the 2000 ramp up. And quite honestly, my view had been that, okay, we're going to go through an AI CapEx digestion phase in the middle of 2025. And then we're going to see a doubling in revenues from NVIDIA through the end of the decade because we still have a lot more CapEx going into inference coming up. The problem is there's not a lot of killer apps out there right now that are driving smartphone demand or AI PCs for that matter. And until you get to that, you have this mismatch between spending and what demand is doing. And think about Microsoft, right? They have a 49% economic interest in OpenAI, which started all this with ChatGPT 2 years ago. They guided below consensus when they reported the June quarter. They guided revenues below consensus when they reported the September quarter, and they guided consensus below. They guided revenues below consensus for the December quarter. That's 9 months now that's been going on. So that should tell you something about where demand and supply is when the guy who's hosting OpenAI is guiding below the street.
Well, yeah, but Dan, I mean, now Stargate's moving ahead without them. They're going to spend $500 billion. You know, we'll see whether it really happens. I talked to Safra Katz last week from Oracle. She seems confident the number is a real number. You point out inference and the fact that, I mean, can't we imagine a world in which enterprise really starts to adopt these agentic agents and they're running a lot of inference and there's just an enormous increase in demand over time, not to mention robotics. I'm just trying to think of things here that Jensen Huang may be talking about or will be talking about that are going to continue to fuel the demand for his company's products.
You're 100% right, David, but you got to remember in the short term, I mean, think about Cisco, right? If you think about Cisco and the buildup of internet infrastructure, that went on for 6 years. Cisco's revenues went up 15.5 times over 6 years with never a down sequential quarter. It did not mean that the stock didn't have a couple of 30% plus corrections as you went through these digestion phases. That's what I'm looking at right now. The thing that's sort of troubling me is if the biggest AI CapEx spender, they're looking out across everything, and they've been complaining about the biggest issue has been they haven't been able to get chips or power. If now they've kind of switched that, you have to sit there and go, okay, well, do you think they have a better view than all of us do? And if they're thinking that that's going to cause their spending to go from 50 to 60% growth to in line with revenues by the June quarter, right? That's the end of their fiscal year, which is mid-teens, then what happens to demand? It's not like internet demand slowed down in 2001 and 2002. It didn't stop the NASDAQ from going down 78% over 2.5 years as valuations came into more in line. And looking at Warren Buffett, talked about at his annual shareholder meeting, selling stocks, et cetera, more cash being raised. You have to think about it, especially when you look at valuation. So I've been saying this for months now, and the more data that's coming out, the more that looks likely. NVIDIA is going to be bullish, don't get me wrong, but you have to look at it from end demand and work your way back, not from what the chip guys are saying, who've been undersupplying for 2 years. And the customers will change on a dime, just like they did in 01, 02, and I think that's coming by mid-year.
First and foremost is that NVIDIA's this week, okay? And that is going to, my words not his, save the day.
Well, you're going to hope that it saves the day. And this is, look, we are where we are today in 2025 because of earnings. Plain and simple. Earnings were the catalyst to get us the appreciation that we've witnessed so far in 2025. So NVIDIA has the ability to reverse some of the negative sentiment that has crept into the market here over the last several days. I really don't think it's about NVIDIA's fundamental outlook. I think it's about the reaction to NVIDIA and the effect on the rest of the market that overall is going to matter.
Well, Dan Ives says it should, he put out a note today, it should calm the nerves of investors.
Maybe it could stop the selling that we've seen in tech.
Unless, does NVIDIA give you the catalyst to play some offense again, and then does PCE give you all the reasons to back that up?
Right, so that lurks out there. I doubt you want to get super negative on semis after what they've done into NVIDIA. I have to imagine that we're never going to get back to the leash being as long on the AI infrastructure theme as it was last year. That doesn't mean it's over. It just means everyone kind of assumes there's going to be an overbuild at some point. We just don't know where it is.
All right.
I think this note to CNBC from Microsoft is a big deal. It's leading CNBC.com right now because it's basically saying what you've said, which is TD Cowen kind of scaring everybody over the weekend. The note was getting passed around, and yet Microsoft felt compelled enough to respond to it and say, whoa, we may move spending around, but we're still going to spend $80 billion.
Yeah, I mean, I thought it was way off base in terms of just the merits of it, because Microsoft does this all the time. And they foreshadowed it even on the conference call, talking about, that they're going to be focused more and more on servers and actually less and less when it comes to some of the data center build-outs. I think this is something that there's more smoke, no fire. I think that's why they had to come out. This was definitely scaring a lot of investors in a jittery market. I think any sell-off here, this is a name that's way oversold, and nothing here in any way makes us nervous.
The broader, we also hear from NVIDIA after the bell on Wednesday, Dan, so everyone's a little bit on edge to see whether they, I'll use the verb again, are showing any signs of being deep-seeked.
Hey, look, I think that's the issue, is that, the nervousness now out there, but it's 15-to-1 demand to supply for NVIDIA chips. I think when Jensen comes out on Wednesday, it's going to, not just in terms of the beat that we think, $2 billion beat, but talking about Blackwell demand. You saw the CapEx, $325 billion from big tech CapEx. That's just going to be more and more, I think, the tailwind for NVIDIA and for this build out. Everyone keeps looking for cracks in the armor. But I could tell you, we're seeing more things accelerate in the last 3 months than anything else. And that's why we continue to be very bullish on names, despite many of the bears, right? I mean, bears are always going to get everyone nervous. And I think Wednesday, those are put to rest.
NVIDIA seems like it's lost its momentum. Reporting earnings on Wednesday. That stock treading water lately. Deepwater's Doug Clinton here on set with his expectations. Good to have you here. So we've seen what's happened with the momentum names, which I'll get to in a minute because you've got some of those in your portfolio. But what about NVIDIA? What should we expect midweek?
I think you have to look, Scott, at what have we learned since DeepSeek. I mean, DeepSeek is really where NVIDIA went off the rails and sort of lost its momentum permanently. And we've learned two things. One is that basically all the hyperscalers continue to spend. And in fact, if you look at the beginning of the year, what the expectations were for CapEx on the hyperscalers versus now, it's up about 30%. So not only are they still spending, they're spending more. We've learned that. The second thing we learned is Jensen actually just gave an interview last week where he said he thinks investors got the DeepSeek thing completely wrong.
That's right. He makes the argument that this is all going to lead to more compute, not less.
More use.
Which really echoes some of the commentary we've gotten from CEOs of the hyperscalers when they've spoken over the last couple of weeks.
That's right. I mean, everybody has basically come out and defended that this CapEx boom is going to continue. NVIDIA's report will sort of be the final verdict, I think. And I think if you put all of what we've learned together, it seems like the report should be fine. Will that be enough for the stock to move up?
You use fine. I mean, fine is probably not going to be good enough. And much of the commentary, certainly today, is that the ability for NVIDIA to beat and raise at such a magnitude as they have in the last couple of years is going to run its course at some point. And the market's going to have to decide if that's okay.
I think the expectations going into this quarter, though, use the word fine. Fine might actually be enough, because I think there's more fear going into this quarter about NVIDIA, because everybody knows if you're following AI and you've seen the DeepSeek thing, you know that if they have a bad number, the stock's down 15, 20%. I mean, it will get crushed. So I think there actually could be an alleviation of fear if numbers are just fine, and they could be better than fine, I think, given what we're seeing again on the CapEx side.
How about,
you think about this report from Microsoft and them potentially cutting CapEx spend, they say they're not. I actually think that's a reflection of the broader attitude in the market. The vibe has shifted. And I think investors in the market more broadly, they sort of almost want to believe that the AI trade is over. They're looking for evidence, reasons to doubt. And so I think that's the hard thing for this trade right now. Momentum has lost its momentum. From our perspective, the AI trade is still real. I don't think this boom is over. I still think we have 2 to 4 years to go. But we always go through these periods in technologically driven booms where you have doubt. That's a healthy part of the cycle, and I think we just need to work through this doubt. Maybe NVIDIA earnings get us through the other side.
I don't even know.
All right, I hope you're all doing well and staying calm in this market. The S&P finished the day about 0.5% lower, and NVIDIA finished the day about 3.1% lower. Let's talk about what happened today, because there is some important nuance we need to discuss. So over the weekend, we learned about a note from TD Cowen that was released this past Friday, saying that Microsoft is canceling leases on AI data centers. Then, this morning, CNBC reported a statement from Microsoft essentially saying that there are no changes to their AI CapEx plans, and that they are moving forward as planned. This entire situation was discussed in detail by Microsoft CEO and CFO on the company's most recent earnings call last month. I'm going to play a snippet of what I said after that earnings call about this very topic. Listen to what I said back then, and then I want to pick up from there. Really quick, I also want to address Microsoft's CapEx guidance in case you missed the video I posted yesterday. Microsoft did not say that CapEx would be less in fiscal 2026 than it was in fiscal 2025. Rather, Microsoft CFO said that the growth rate of CapEx would be less in fiscal 26 versus fiscal 25 because Microsoft had to spend a lot of money up front on things like land construction and utilities to construct the actual buildings for many of their data centers. But in fiscal 2026, many of those facilities will be fully constructed. And at that point, Microsoft's CapEx spend will shift away from those external costs and shift more towards short-lived assets inside of the data center, such as CPUs and GPUs. That is good news for NVIDIA. We know that in recent years, Microsoft have been lagging behind on data center capacity. I'm talking about the actual physical facilities, including things like land, buildings, and utilities. And so Microsoft spent a lot of money up front on construction projects to quickly meet these needs. And now, as many of those projects are completed and those facilities come online, Microsoft can now shift their CapEx spending toward assets inside of the data centers, like GPUs from NVIDIA. In my opinion, the note from TD Cowen is nothing to be concerned about, given what Microsoft said about this topic on their most recent earnings call. And so I think today's sell-off in Microsoft and NVIDIA was unjustified. The note from TD Cowen also implied that Microsoft could reduce their CapEx in the very near future, similar to what Meta did some years ago when they cut CapEx on a metaverse program. But that appears to not be the case, as Microsoft's statement to CNBC today shows they are still moving forward with their planned $80 billion of CapEx in 2025. Nothing has changed. All right, now moving on, let's briefly cover a few things about NVIDIA's earnings this Wednesday. I will be completely honest with you. I'm actually more optimistic about the quarters that NVIDIA will report sometime in May and August, as those are the reports in which Blackwell earnings should really show up in a substantial way. That being said, I think NVIDIA is likely to report great numbers this Wednesday. I just don't know how market participants will react in the short term. Market participants' main focus this Wednesday will be NVIDIA's guidance. And that is something that I'm slightly concerned about in the short term. Blackwell is ramping in volume, which is great for NVIDIA, and that bodes well for NVIDIA's guidance. At the same time, I'm slightly concerned that the threat of tariffs may cause NVIDIA to give softer guidance than they otherwise would. The president has said multiple times that there will be chip tariffs and that those tariffs will be on top of any reciprocal tariffs. That poses a challenge for NVIDIA when it comes to issuing forward-looking guidance. And so that is a short-term concern that I have. But again, that is just a short-term concern, not a long-term concern. Regardless of whether there are tariffs or not, I think NVIDIA will be fine in the long term. All of the hyperscalers reaffirmed their commitments to their 2025 CapEx plans on their most recent earnings calls. At least $60 billion from Meta, $75 billion from Alphabet, $80 billion from Microsoft, and about $100 billion from Amazon. A large portion of that CapEx will go to NVIDIA. In the short term, I have no idea what to expect because anything could happen, and I have no idea what NVIDIA's results will be this Wednesday. But from a long-term perspective, I'm optimistic as Blackwell ramps in volume. We have GTC in March, and thus far the hyperscalers are continuing to increase their AI budgets. Speaking of GTC, remember that it is scheduled from March 17th through the 21st with a keynote from Jensen Huang on March 18th. This is an important event for NVIDIA, and it is where we are likely to get news about NVIDIA's data center products, which is where NVIDIA makes the majority of their revenue. So mark your calendars for that. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.